Hey guys, so this is my 60th video, and I want to thank you for all this. It's nice to be heard, and it's nice to put another perspective out there. My ultimate goal is to help new and old investors and swing traders realize or look at things, stock or company, from another point of view, from a financial view of things. Although, we know we're in the YouTube business, and great numbers are really what's pushing the algorithm. So, liking, subscribing, and actually putting your insights on the comment section below would help a lot. So, we can reach more people and introduce them a new process. And so we can actually build a community around this. Also, I'll be discussing some changes, some additions in our videos. I'm sure you will like. More on that later. Let's proceed to the video anyway. I thought I'd do this once in a while. I've screened a lot of stocks for the last 59 videos, and I thought a list of buys, holds, and avoids would help if I had compiled it in a single spreadsheet. These are my recommended buys. These are stocks that are trading at a discount, meaning they're trading below the PEs they should be trading around at. This is based on their margins when I screen them with my second metric. Your homework is to know why that is the case. But again, as long as their financials confirm everything, I'd happily accumulate around these prices. I've discussed each of these stocks in my past videos, even recommended you my best entry prices for each. You can also analyze my entry prices with your technical analysis prowess. So if you like one of these stocks, just go to my videos tab and search for it. In my list of buys, we have QCOM, Zoom, Coin, AbbVie, Ben, Tiro, McDonald's, 3M, TXN, Baba, Visa, FL, PG, Tyson, Target, Avgo, Skyworks, Intel, and Facebook. Now, with this Tyson and Target, I just picked them because unlike other consumer defensive stocks, they're not valued the same with the rest. Next, these are stocks on my watch list. These are stocks trading around the normal PEs they should be trading at. Again, based on my metrics. Personally, I don't recommend buying stocks at fair values because you want to have your margin of safety discounted from their current prices. But I learned some things, especially to the biggest tech stocks like Microsoft and Google here. I had them in my watch list, waiting for them to drop more, but they shut right up. I thought with this kind of stock, we should pay a bit of a premium for them. And to tell you honestly, I'm okay with that. So on my watch list, I have Hood, Roblox, Square, Coca-Cola. Although it's overvalued, I know, but I had it on my watch list just because I wouldn't buy Pep and I'd rather buy Coke. So why not just put K on my watch list? Adobe was overvalued, but then I kind of understand because they have high margins, and so I'm not gonna totally avoid the stock, but you know, I'm watching some levels for Adobe. HPQ, WBA, Microsoft, Google, Palantir. I haven't bought Palantir yet. I just think there's more dilution to come, and I think that will hurt the stock price. And Tesla. Tesla is severely overvalued. Haven't bought it yet. Maybe after the stock split, I'll reevaluate. Next is Nvidia. Nvidia is overvalued, but overvalued in the sense of having this growth multiple. I actually had Nvidia in my watch list. I wanted to buy, but then it shut right up. I was waiting for it to come down a little more. But then, yeah. Next is my avoid list. These are stocks trading at PEs way above normal. You'd see multiples here of 2 to 4, even higher. Some here are just stocks I guess I'm not touching for years. Some here are stocks maybe I just don't totally get. I guess I'm not a buyer of these stocks for years because they've priced in years of growth already. And I don't think the EPS would catch up anytime soon to justify these prices. I have in my avoid list Pepsi, UPS, Shop, Spot, Roku, DPZ, GPC, FedEx, Nike, Starbucks, WM, ADP, Apple. Now, about Apple, I really want to buy Apple, but I guess it's just way too high a multiple, unlike Microsoft and Google's. I also have AMD here, Disney, Amazon, ADP, ASML, PayPal, KHC, Clorox, KMB, IBM, CMG, YAM, and QSR. Next one here is a list of stocks. I don't know what to do with yet. These are unprofitable stocks, which I really can't make sense of their numbers yet. Here's my portfolio at the moment. Haven't sold anything, haven't bought more. Talk about putting money where my mouth is, right? I have here Facebook, Intel, Footlocker, TXN, and Visa. Guys, I want you to understand something. I don't avoid or hate high PE stocks. In fact, I have Visa, Avgo, AbbVie, and Coin here. And I'm a buyer of these high margin stocks. It's just that we want to pay them at the right prices, at the right PEs, with some discount for safety of margin, of course. Another thing, these stocks don't mean they have to trade differently from here. It doesn't have to hit our target entry prices. The markets could be very irrational. Overvalued stocks could still trade at overvalued prices. Discount could still trade at discount prices for years and years. But at the end of the day, guys, the goal is not to overpay for stocks, especially when you're moving huge sums of money. The ultimate goal of the stock market is to own part of company, and buying them at cheap is a great deal. As they buy back their shares, your ownership of the company grows. That is also why you only buy stocks or companies you want to own. Now, about some changes, yes, I will be covering more of their financials, debt levels, and some more important ratios. Plus, I will be introducing two more metrics. One I've discussed already with my AbbVie video, and another metric that would help us understand how the retail stocks trade, especially stocks with low profit margins. That makes a total of 5 metrics. We're no longer 3 metrics, plus more of their financials. These changes should start by next week. Hopefully, you'll like them. So, yeah, consider subscribing, liking, and commenting your insights down in the comment section below. I'd happily address them. I always reply to them. And yeah, see you in my next video.